toughest year for us. And as far as my experience with this market from last 20 to 25 years, these 3 years was the toughest years. And we have seen a complete roller coaster ride on the downside when the lockdown happened, and a steep rise after that, rappelling across the world. So, as far as the markets are concerned, if you see the Sensex in the MTD in this last 27 days, it's down by 4.92%, and on a YTD basis, down by 7%. Nifty 50, which is down by 6%. Bank Nifty has not fallen on a YTD basis. The biggest damage has happened in the mid-cap space, which is down by 8.34% in this month, and on YTD basis 10.03. Small cap, Nifty Small Cap 100, where the damage has happened by 15.05%, and on YTD basis January it's 22.81%. The most stable sector known is Nifty IT. If you see that IT is down in this month by almost 11.49%, and on YTD basis it is considered to be the safest haven. The IT there is a great damage on IT, especially all the IT companies so severely. If you see that volatility index, it remains in the range of 12 to 20. This is the actual range of the volatility index, which is called VIX. And in the month of March, this volatility index has gone to 32. And now the volatility is 24, 25. But when the lockdown happened, in the history of Indian volatile markets, the VIX has gone to 84. So in US, that is around 15. Is going to impact businesses, how it is going to impact markets, how it is going to impact valuation, that we are going to discuss. So, what is the corrective action which central bank has taken? Indian central bank has taken. They have immediately in the last policy, they have raised the repo rate from 4% to 4.40. They have raised the rate, and they have clearly investing in Nifty. And in mid cap, 21.2 rupees I am paying to earn 1 rupees. And in small cap, I am paying 19 rupees today to enter. This is our captive sheet which we have created, which is updated minute to minute. Composite index are doing. Consumer, ever in the month of April, we have seen the highest GST collection. The last number was 1,37,000, and even in the month of March, the number was really good. And in this month of April, it's 1,67,000, always slave of earnings. So the point is that if the earnings are there, however, very, very honestly, any other stocks or company except Nifty 50. And our ultimate endeavor is that we should deliver at least 2 to 3% over and above Nifty returns, post expense, post performance. And we have kept the lowest expense in the your portfolio or Nifty. If you have 100% invested into market in the form of ETF, you are also going to go down by 5%. So our Nifty, our beta is 0.848. So that means we are going to fall less. And but when the market will go up, we are going to give risk-adjusted return better than the Nifty. So I don't want to get into those details because this is not the time. I think even in spite of 60 to 70% of a client out of station, but still the house is full. Your love and affection, I think, is actually telling us that yes, you are there with us. So I don't want to spend much time on this review, but few things which we want to share with you in terms of what has happened in the last 3 to 4 months, the development. And at the same time, we would like to also felicitate the people who have joined in PMS and given us checks in the last quarter of 4 months. They believe in us. They have given us their hard-earned money, and we will make sure that we will live up to their expectations and try to continue to outperform the benchmark. So these are all numbers. So IFM sector outlook I want to share based on the market. We are bullish on communication, IT, and let me share with you, we were overweight on technology, and technology was hammered like anything. Even in spite of that, even in this month, Nifty is down by almost 5%. We are down by only 3%. So in this month, we are going to create an alpha of 2% for our clients. So we are not going to fall as much as the Nifty is. So that is a strategy. And energy, financials, real estate, consumer discretionary, industrial, we are outperform, they are likely to outperform. Consumer underperformance is consumer staple, utility, material, and healthcare. They are the sector. These are the 11 sectors. So these are likely to outperform. These are underperform. And in consumer, real estate is likely to do well. Financials, they have not participated from the last 3 years. They will do well. Consumer discretionary, automobile will do well. And industrial definitely do well. Communication, again, you have only 3 players now. If you'll remove Vodafone, there are only 2 players. So that will do well. There are a lot of mixed view on IT, but I want to share with you, if there is going to be cost cut in US and Europe, more and more people will become digital. So their digital spend is likely to increase to make it more efficient. I don't think so that our companies, for an example, a flagship company like Infosys has fallen from 1900 to 1400. I think this is a good time to look at it. Even in your portfolio, HCL Tech, which has moved from 1400 to 980. Yesterday we have added 0.5% in all clients' portfolio. Today is above 1000. And TCS, which has again given the buyback just 6 months back at 4500. Today is hovering around 3200. I think it's again, if somebody has a patience, these are the companies likely to do well. I'm not talking about the second line companies in IT, but these companies are reasonably good valuation today. If somebody can hold for 1.5, 2 years, they are definitely likely to give more than 20% kind of returns to the client's portfolio. And we will still going to be remain overweight on IT, even in spite of a lot of bad news which is there in the marketplace.